Hi everyone, let's go over my micro, bullish and bearish Elliott Wave scenarios on Bitcoin, starting with my micro bullish scenario where we are still looking for a move to the upside in an impulsive structure. After wave 1 is then a leading diagonal, and in wave 2 we have a complex structure in a WXY where the most common target area for wave Y is between the 1 and the 1.236, taken from the high to the low of W to the high of wave X. And as you can see at the moment, it has been very nicely respected, also right on top of the support area that we have over here. Now currently with this wick to the downside, price also took a couple of lows for liquidity. It took low number 1, low number 2, number 3, and also this one over here, low number 4. The invalidation for this bullish scenario is if price would take this low over here, and this one still remains, which is very important for this scenario. If we look towards the upside, then we're looking for a wave 3, which usually is the strongest wave in an impulsive structure. And usually also a minimum target for a wave 3 is pulled with the trend-based fib extension from the low of 1 to the high of 1 to the low of 2. And then you have to look for the 1.618 trend-based fib extension over here, sitting at 30.8k. And what is important about this target for wave 3, at least the minimum target for wave 3, is that it has to pass this wide resistance area, sitting between 30.5k and 30.7k. I do think if price can actually go through this wide target area, that it might jump to the upside towards the other resistance area that we have over here, which is still untouched, sitting between 31.1k and 31.3k, as then very likely price will fill this whole gap. Yes, we have a little bit of a order block over here, but the 1.618 target is just above the order block, and I think if we can take the high of this order block over here, then we move to the upside to reach these higher levels. If we go to the micro bearish scenario, it looks a little bit like clutter, but I'm gonna get you through this particular scenario, because in this scenario we are looking for downside, and then a 1, 2, 3, looking for 4, and then a 5 to the downside, where the most common target area for a wave 5 is between the 1.236 and the 1.618, taken from the low of 3 to the high of wave 4 that I currently have on top of this price action over here. Now if we look at this move to the downside, if we are looking for a wave 5, you want to see an impulsive structure. And this is important because if we are looking for an impulsive structure to the downside, then I prefer not to see expanding diagonal structures. And this move over here doesn't look very nice. If we look at this move, then yeah, can you count a diagonal? Potentially in a 1, 2, 3, 4, 5, but it is an expanding one, very rare. You can't count an impulsive structure because there's overlap then between potentially the low of wave 1 and the high of a wave 4, and then a 1, 2, 3, 4, 5. So that is not what you want to see, and it is definitely not a contracting diagonal. So that is also something that doesn't really fit an impulsive move to the downside, and that is why in the update section in Discord I've been writing about this move to the downside. First of all, the bearish CVD divergences, which obviously now played out, and then I spoke just now here in the group. I said, well, quite a move down. It's interesting because the price action in the circled area does not resemble an impulse or a diagonal, and an expanding diagonal is very, very rare, and therefore I'm still looking for a move towards the upside to take at least a high at 30.5k. So this structure for me doesn't really look like an impulsive structure, while price was dumping to the downside, expecting a bit of a bounce for then a move to the upside. Now if we then look inside of this wave 4, because time is ticking, this price action over here is already past the 3 fib time, which is extremely long for a wave 4. So if price moves back to the upside, probabilities are low. It's part of a wave 4 and then another 5 to the downside. This would be better for the high of a wave 4, but the problem is we didn't get an impulse, right? And if we would look at this wave 4, then how are we going to count this? Because if this is a first structure to the upside, second structure, and then a third structure, then the most common measurements for corrective structures is a trend-based fib from the low to the high over here of the first structure to the low of the second structure. And if I put it on the WXY targets, you can see that the 0.618 has been hit, but price moved above. It's not like very nicely respected, and we didn't hit the most common target area for either a zigzag or a WXY, which is between the 1 and the 1.236, which is above price. So it's a little bit like floating in the middle of the different targets, and that is also not too great. So if we then look at another move to the upside, what is interesting, as just explained in the bullish scenario, is that if we count this as the three-wave structure, it works in a W XY. So we have a nice three-wave structure to the downside, but this can still be part of then a wave X in a wave A, then you have a wave B, then a wave C, and then you get a move to the downside. And if we then look for this wave X over here, then we take a trend-based fib from the low to the high, to the low that price has just made, and then we can look for a zigzag target between the 1 and the 1.236, which is sitting between 30.5k and 30.6k. So this is a very important area for price, and again, it's in confluence with the wide target box that we've been looking for a while right now. So the price action here is actually quite complex. It's a complex sideways structure. In summary, it's for a wave long, very long at the moment, time-wise. For a wave 4, that's not really what you want to see. If we look for a wave 4, this high would have been the best high for a wave 4, also time-wise, but then you want to see an impulse to the downside, which so far I don't really see as an impulsive structure. Expanding, very rare. So yeah, I'm looking still for another move to the upside and look for that white box over there. If we then look at the CVD divergences, we have bullish CVD divergences now between the new low and the low over here. We did have previously bullish divergences between these two lows over here, with the target then being this one over here. However, in the meantime, price was generating bearish CVD divergences in this range over here. And that is what you see if I go to the 15-minute chart and I zoom out just a little bit. You can see over here that price in this area created bearish CVD divergences. We have lower highs on price, but on the yellow line, higher highs on the CVD, bearish CVD divergences, absorption going on. And yeah, you can have bullish CVD divergences on blue, higher low on price, lower low on the CVD. But once you start to see counter CVD divergences over here, you have to be wary about those bullish CVD divergences, because you might get a move to the downside as market longs are being absorbed. So now we have this bullish CVD divergence where the target is this high over here, and that is also still what I am then looking for. And with the order block, we have a bit of a bearish CVD divergence, but it's not the best one like from an order block, like taking CVD dips from an order block. Here we have more structure for the bullish CVD divergence. So I personally am looking to take this high and then wait and see how price is going to react there. And that is then also my probabilities on the micro, still looking for price to reach this white box eventually, right? We have to wait and see then what happens over here. If price is going to reject and create bearish CVD divergences, well, you know, potential move to the downside. But if price is going to have a bit of resistance and then create bullish CVD divergences, I can imagine we push through to higher prices, and then we look for this blue box over here between 31.1k and 31.3k. I hope this video was helpful and valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.